Welcome to my channel. I'm Scott, and in this video I'm going to show you the stock screener on Simply Wall Street. This is the home page on Simply Wall Street, and you just click on screener right here. You do have to be a member of their service to access this. It's only $10 or $20 a month. If you want to join, just click on my personalized link in the description of this video. Their screener is a little different than most websites. It's more of a visual screener. So right now there's no filters. So every company is listed, 51,367, and it's sorted by market cap. You can see right here, Apple is the first company. Saudi Aramco is a second, but that's a private company, not a public company. You can sort by the website rankings. They have a ranking system. You can sort by PE ratio, price to book, ROA, ROE, EPS. The purpose of a screener is to try to identify a small subset of stocks within your parameters, so you could dig a little deeper into those stocks. I like to narrow my search down to around 5 stocks. Then I'll learn more about those stocks. I'll read news stories, go through their 10K and 10Q. So let's filter by market. Just hit the add right here, and it starts with the US markets, and then Australia, UK. But say you can't find your market, there's so many here, and you generally trade on the TSX, Toronto Stock Exchange. Just type in TSX, and that comes up right here, and you could just click it. For this video, we'll do New York Stock Exchange. So let's click that, and that narrowed it down to 1,962 tickers. The biggest is Berkshire Hathaway. Now let's filter by industry. There are a lot of sectors: automobiles, automobile components, automobile parts and equipment, banks, building, consumer services. You'll find everything in here. Energy, REITs. Let's just choose automobiles. We'll see manufacturers like Ford and a bunch of other companies. Now we're down to 28 companies. The largest is Ford, and the smallest is Superior Industries International. Simply Wall Street gives you this really nice visual if you're looking for value stock or dividend stock. This kind of blob shape within the circle gives you that information. Let's filter it a little more so we get down to about 5 or less companies. Let's go to advanced filters. So we could filter our market cap. If we only want companies above 1 billion, we can go right here. This will go 1 billion up through infinity. Now we're down to 20 companies. Of course, Ford is still the biggest. That didn't change. And the smallest now is Holly. We can filter the PE if we like companies below 20 PE. Now we're down to 10 companies. You could filter by future growth estimates, past performance, debt to equity ratio, the dividend yield. If you like a company that pays a dividend, we could filter that out. Each circle is 1%, so let's do 2% and above. So now we're down to 5 companies: Ford, Autoliv, Thor, LCI, and Dana. You can get a ton of information from Simply Wall Street. Let's just click on one of the companies. We'll click on Ford. This gives some high-level information about the company. We can see some of their competitors: Tesla, GM, Ferrari, Rivian. This chart shows us a stock price in the past year. We could change that to 5 years, 3 years. Here's some recent news and updates. Ford's undervalued multi-billion-dollar Turkish delight. We could click on that and get a little more information about the story. In the past year, Ford returned 24% to its shareholders, the US auto industry 18%, and the entire market -6%. Ford is average volatility. The industry has pretty high volatility. High-level information about the company, the year they were founded, the employees. We can hit show more. Look at that PE ratio, 3.4. Is Ford overvalued? See fair value and valuation analysis. The fair value of Ford, according to the website, is $34, and it's trading at $15, so it's 56% undervalued. If you want to know how they calculated that $34, you can just hit View Data, and you can go through their model. In order to calculate the value of a company, you need to estimate the future free cash flows. You also need the risk-free rate, the beta, and the discount rate. 5 analysts projected their free cash flows in 2022 to be $5.5 billion. And the present value of that is $5 billion. So this website takes analyst estimates. 4 analysts projected 2023, 4 for 2024, 2 for 2025, and 2 for 2026. And Simply Wall Street goes out another 5 years. So they're estimating the free cash flows for the next 10 years. And then the sum of those 10 years is $65 billion. And then they calculate a terminal value, that's 72 billion. 72 plus 65 is 137 billion. You take that 137 billion, divide by the shares outstanding, and you get $34 a share. They show the PE ratio. This dark blue line is Ford. The green or light blue is the auto industry, and the red is the entire market. Here's the PEG ratio for Ford, price to book, and this chart shows the forecast for Ford. This dark blue line is their forecasted revenue up through 2024. You could see their earnings, free cash flow, operating cash flow. These are the analyst growth forecasts. The forecast is for Ford's earnings to decrease 17%, the industry to increase 23%, and the market to increase 12%. And here's the revenue forecasts. This chart shows their EPS forecasts. Here's Ford's ROE compared to the auto industry ROE. If you want to look at past performance of their revenue, that's the blue line. Earnings, that's the green line. You can do free cash flow from operations, operating expenses. You can see their past earnings also compared to their industry and compared to the market. This shows us their short-term assets, short-term liabilities. A short-term asset is expected to be sold within a year. A short-term liability are obligations due within 1 year. And long-term is beyond 1 year. We can see their debt since 2015, their equity since 2015, and their cash balance since 2015. And of course, you can view all the lines at the same time. Here's a visual of their balance sheet. Here's their asset side, and here's their liabilities and equity side. This gives us information on their dividend. The next dividend is to be paid on June 1st. The ex-dividend date is 4/25. So if you buy the stock on 4/25 or after, you will not get the dividend payment. You have to buy the stock on 4/24 or before. Their dividend yield is 2.6%, which is higher than their industry of 1.9%. And the forecast is for their dividend to grow to 2.9%. This chart shows their dividend yield since 2011. We can also see their dividends per share and their earnings per share. And you can look at all three lines at the same time. This green line shows the CEO's salary, $1.7 million in 2021. This blue line is their compensation, $23 million in 2021. And the dotted line is their earnings. We could see their leadership team, how long they've been there, their compensation, and their percent ownership. We could see a list of their board members. Here's a breakdown of the ownership information. 57% by institutions, 41% by the general public, 1.3% by insiders, and 0.04% by the government. Their biggest shareholder, State Street, 8.6%. Here's the number of employees the past few years. They currently have 183,000 employees. And here's a list of where the stock is traded. It's traded on the New York Stock Exchange, London Stock Exchange, and a bunch of others. And it's been listed since 1968. Let me know if there's a financial website you want me to make a video like I did for this one. And if you want to be a member of Simply Wall Street, just click on the link in the description below. And please like the video, subscribe, and leave a comment. Thanks for watching.